Hey guys, it's that Dividend guy coming at you with another Robinhood portfolio update. Happy Tuesday. Hopefully everybody's having a GGD, a great green day in the market. You know I always wish the best for my viewers and subscribers. So today we're going to go over the overall portfolio value, how it's performing by the metrics, our buying power, and exactly why that went up. Then we're going to jump into the individual stock performance and how each individual company is performing. See if there are any deals within the portfolio, as well as we're going to take a look at Berkshire and see if it is a buy for us right now. So jumping right in, we are sitting at $55,617.99, a $372 gain today with about a 0.5% in the green. Then that 1 week mark, we are up $1,889, a 3.5% return here for the past week. Then that 1 month mark, we are up around $3,000 with a 5.57% return for the past month. Then that 3 month mark, we are up nearly $6,000, about $5,900, a near 12% return in the past 3 months. Then we are up $5,778 with an 11.60% return for the year to date. Then the 1 year return, we are up $7,100, a near 15% return here for that 1 year mark. And then all time since April 9th of 2018, we are up $20,275.30, a 57.37% return all time. Guys, our buying power did go up. We got paid by Realty Income, that $44 dividend. So now we're sitting at $229.85 for our buying power. I'm going to let that sit and wait until the stocks next month pay us and see what deals we have. Might just add an Apple share, and if Visa is still a good buy, I will be buying Visa, just depending on which one of those two is a better deal when that dividend hits next month. So jumping in to Realty Income at $56.22, we have 170 shares, $9,500 worth of market value. Average cost is $65.03. 17% of the portfolio is in Realty Income. Today we're up $41. Total, we're down $1,500 with a 13.5% loss. But guys, even though we're down 13%, we're actually up from where we've been in the past few months. It's been down as low as like $1,800, I believe. So we're actually, even though we're still negative, we are up compared to where we've been at in the past. So a good buying opportunity here still for Realty Income. A good place to be putting my money if I had extra cash and if I wanted to grow this position. As of right now, my main goal is to make Apple the biggest position within the portfolio. And at the same time, I do want to build Visa and Coca-Cola, but Apple is going to be our biggest focus going forward. Next, we've got Altria at near $47 a share, 320 shares, $15K worth of market value. Average cost is $47.27. 27.71% of the portfolio is in Altria. Today we're up $83. Total, we're actually in the green here of $230, a 1.5% return. So guys, this, just like Realty Income, has been down for quite some time. Nice to see it in the green, but the main goal for this is just the passive income that it provides and how I could distribute that into both Apple and Visa. Guys, I sold Google, bought a couple of shares of Apple with that money, and then I also used the dividend from Altria to purchase another share of Apple. So the main goal for Altria here, I just called it the defensive lineman in the past couple of videos. This is the stock that's going to give us the opportunity to buy Apple and Visa and even Coca-Cola if it's a good deal. This is going to be the main cash flow generator, and I could actually put the money back into Altria and make that dividend grow as well. So I have quite a few options, but Altria has its place. I know it's not the most popular stock in the market, but it is the biggest passive income generator as of right now in the portfolio, and it does its job very well. Then we got Coca-Cola at $65.06, 15 shares of my favorite drink company, $960 worth of market value. Average cost is $60.54. 1.7% of the portfolio is in Coca-Cola. Today we're up near $10. Total, we're up $52 with a near 6% return. Guys, this is going to be one of the big three within the portfolio. It's going to go Apple, Visa, and Coke. As of right now, I'm focused on buying Apple because I do want it to be the biggest position within the portfolio. but Coca-Cola will be getting funds allocated to it very soon as well. Then we've got Apple at $234.05, 5 shares, $1,170 of market value. Average cost is $209.30. 2% of the portfolio is in Apple, down $1.78 today. Total up $123.52 with an 11% return. Guys, I used to have a 70% return on 1 share of Apple. Now I have an 11% return on 5 shares. So I did lose out on total return here simply because I bought at a higher price. But this is one of those that I've missed my opportunity in the past, and I do not want to miss it here again. I bought Apple at I think 180 before the stock split. It got up to like 300 something, and I sat on like 2 shares for like a year and ended up selling it. So I just don't want to be in the same boat and missing out on Apple because I understand the company very well and I want to own it for the long term. So this is going to be the biggest place I put my capital, the most focused position as of right now until it gets to the size that I want it to be, which will be around a Altria, maybe AbbVie size before I stop allocating capital to the position. Next, we've got AbbVie at $168.81. 95 shares of AbbVie here at $16K worth of market value, making it the biggest position in the portfolio. 95.19 is our average cost. Right around 29% of the portfolio is in AbbVie. Today we're up $71. Total, we are up near $7,000 with a 77% return. Then, of course, that AbbVie dividend coming in of $155 per share, totaling to a dividend of $147.25. And guys, like I said, this is going to be added to that $200 that we have currently, as well as Realty Income will pay a dividend and Apple will pay a dividend as well next month. And all that money will be going into Visa stock if it makes sense to purchase at the price when the dividends hit the account. Then we've got Visa at near $270 per share. We have 1 share at $268.28. We are down we're up a penny. 0.5% of the portfolio is in Visa. We're pretty much break even here, guys, so it wouldn't be a bad place to purchase it near our average cost. So if it stays at these prices, when I get paid my dividends next month, I will be buying another share of Visa. Then we got T. Rowe Price at 120. Guys, this one's been climbing day in and day out. 100 shares at 120.65, $12,000 of market value. Average cost is right around 110 per share. 21% of the portfolio is in T. Rowe Price. $191 gain today, almost $1,100 gain total with a near 10% return here on T. Rowe Price. And guys, the reason I think this stock is going to be a great investing opportunity for me personally, I understand the business, I've owned it in the past. Its 52-week high, 52-week high for the stock is 120, so it's at near or at its 52-week high right now. But over the past couple of years here, it got up to 220. So minus an economic fluctuation, big market downturn, interest rate hikes, whatever, there's been a lot to affect this stock and make it go down. But the real return that I see is over the next 5 years could get up back to that $220 range, which would double my overall return. So it would be a $24,000 portfolio position in the portfolio with a growing dividend. So I'm excited to just let this ride, hold it, and this dividend will buy me nearly 2 shares of Coca-Cola every single quarter that it pays. And then, guys, with my Berkshire B on the watch list, I want to own this. I want to own 1 share per year, so I own myself 6 or 7 shares at this point. I'll make up that throughout the year or throughout the years, and I will eventually own more than my yearly celebration of buying at Christmas. But guys, I want to own the insurance. I want to own See's Candy, Dairy Queen. They have a plethora of businesses, and that is the main competitive advantage that I see within Berkshire, is just that they do underwriting. They do a very good job at their insurance and their underwriting criteria. But the thing that I like more about Berkshire than anybody else, most of the time with insurance companies, you have the total ratio, which is the insurance premiums minus their liabilities or their claims. And then they have investment income, which is the money they make on those premiums before a claim gets comes in. And that's where they make their total ratio. A lot of times, even if the overall even if overall claims outpace the money that they get in and their premiums, the investment income will put them above 100%, so they don't lose money. But even if they do that, the reason that I want to own Berkshire over companies like Travelers, which does a really good job at underwriting, Allstate, Aflac, etc., I want to own Berkshire over an individual insurance company because other insurance companies invest to help them counteract their float deficit. But Berkshire has that same ability to invest, but they also use that float to buy businesses, have other businesses that bring in revenue, as well as, so they have fully owned businesses that bring in revenue, as well as their public portfolio that brings in dividends and accumulates. They can buy, sell, do whatever they need to in order to help that ratio out. So I just view Berkshire as a better fallback. I do understand insurance. I like the business. It's very lucrative, but can be very risky if you don't know what you're doing when it comes to underwriting. So Berkshire is my way of getting insurance exposure and exposure to their massive float, but it's a little bit easier for them to counteract losses because they own so much when it comes to fully owned subsidiary businesses and publicly traded companies. So I'll own Berkshire here soon. But guys, as of right now, the big focus on the portfolio overall is just to buy more Apple and Visa, build those positions so I don't have 17, 18, 25% in an individual company that's not Apple. I want 25% of the portfolio in Apple, in Visa. Eventually, I think about 15 to 20% would be fine, but it will bring down those realty incomes, those Altrias, the AbbVie, and the T. Rowe Price exposure in the portfolio and really even it out. So with that being said, guys, I just want to say thank you so much for watching. Remember to hit the subscribe button on my channel, that Dividend Guy. I post videos here Monday through Friday. Try to be as consistent as I can. If you guys enjoy consistency here on YouTube, hit that like button on this video. Hit subscribe so you don't miss tomorrow's update. Thank you so much for watching, and I'll see you guys tomorrow with another Robinhood portfolio update. Take care, guys.